Good morning and welcome to Almus Market Mornings. Wishing all of you a very happy Diwali and a prosperous new year. We have all been speaking about the rupee for more than a month where nothing interesting was happening. It opened in its familiar ranges in trading without any major movements, some days being contained in its 3 paisa daily range. On Friday, USD-INR finally broke above 83.30 and shot up as high as 83.57 as per November futures, finally settling around 83.35. And that's where markets were even during the more trading session. Good morning, JK. I'm sure our listeners are very keen to hear all about the rupee. Is this the break that will finally take it up? Why did it happen, and what's your expectation going forward?
Good morning, Swaraj, and happy Diwali and New Year to all of you. Uh, yeah, I think again for this, the answer will be given only by the central bank, according to me, because they have such a wise grip on the market so far. And in fact, as per the reports indicated, even they are looking into why there was a technical glitch that did not allow selling on the system to happen on Friday, which led to the dollar P going above 83.50 also. So, and then we closed also around 83.34, which is not a big deal. So, if you look at the reasons why rupee should weaken, there have been several of late, but most of them have now reduced their influence. Like dollar index is lower, oil prices are much lower, risk sentiment is positive, and then we also have the dollar yields which have come down substantially. Only the Chinese one is holding at the weaker level. So fundamentally, if you see, things have worked somewhat in favor of the rupee, but the moot point is we don't have flows to that extent that would influence the rupee lower, or in that circumstance we need to see whether RBI is again going to come and step in and supply dollars or not. Technically, it does look like it can be treated as a breakout to the upside, and if RBI is less interventionist, yes, we can go towards 83.80, but that answer needs to be found today when the bank trading starts. So we'll wait for that. But fundamentally, I don't think there is a case for rupee to weaken too much from these levels, unless the global situation warrants in any case, because we are getting indications that the global economy is slowing down. And in fact, the Indian industrial production, which dropped quite sharply, did not drop, but the rise was much lower than what it was on the previous month at 5.8%, indicated that there is a slowing in activity on the manufacturing side, which was already indicated by the PMI survey, which came earlier in the month, and that was at the 11-month low. So there is a slowdown in the global economic activity, which can also impact the EM currencies and the INR. So there is a whole mixed picture for the rupee. There's no clear-cut answer whether we are breaking out. I think we should know it in the next couple of days. On the global market, Friday, we had one data point, that was the Michigan consumer sentiment from the US, and that saw a sharp decline to 60.4 in October from 63.8 in September. And the whole host of indicators in that, like the current conditions and also the index of consumer expectations, all of them decreased. The worst part is that inflation expectations also rose to 4.4%. Again, we are visualizing a situation of stagflation, higher inflation, and a lower growth. This is how, but this is not a major indicator, so we cannot give too much of weightage for this, but definitely it is something that we should bear in mind along with the other indicators as well. And we also had the news of Moody's investors saying that they are inclined to downgrade the US as a country because of the wider budget deficits and political polarization, and they are keeping the outlook negative from stable, whereas they have actually affirmed the nation's AAA rating, the highest investment grade. Again, this did not have much of an impact in the Asian market today, because the factors behind this change are already well known in the market. And one other agency, Fitch, has already done it. Therefore, there is no much of an impact. Markets are quite rangy in Asian markets. But on Friday, again, bond market was also seen quite rangy. There's no major factors to push it up or down either way, and we did see very narrow movement except in the 2-year, which slightly went up. Now futures now show, interestingly, a 35% probability that Fed will cut its overnight lending rate by 25 basis points in next May, and that's quite interesting because market is discounting this based on I think probably the slowdown that is seen in the US economy. On the stocks, we did have a US market rally quite strongly along with Europe, but the EM markets were down basically because of the Chinese factor. China had announced their inflation number the previous day, which showed the deflationary pressures continue. But on the US side, possibly, there is an indication that the possible government shutdown post November 17th has been averted because the new Speaker of the House is arriving at some short-term solution to the passage of a spending bill. So that could have prompted, and also the continued belief that Fed will not be raising rates despite their reiteration of higher for longer stance for several weeks. So that's also supported the stock market. Then on the currencies, once again, very rangy, not much direction visible, but undertone looks like weaker commodity currencies and steadier major currencies. Once again, Japanese yen at very interesting level at 151.60, not far from the level where there was a massive intervention in September of 2022. So either the Japanese yen or the Chinese yuan are once again going to give the leading indications for the currency movements. Gold is had a good correction from 2010 till 1933, and that satisfies some technical correction criteria, and now it's trading around 1940. Unless dollar gets more strength due to any other factors, I think gold remains supported at these levels for a gradual move up. So overall, markets steady, waiting for CPI inflation. In fact, we have inflation number today from India, US, as well as UK. So all of these are expected to come down, and that's good news from the risk assets perspective. But from the global growth perspective, I'm interested more on the global growth perspective. We will have some retail sales number from the US also. So these are the now actually markets are in a wait and watch mode to see how the global growth evolves in the coming months and how the monetary policy will respond to it. That's what we are interested in. Thank you.
Thank you, JK. And quickly summarizing, especially for USD-INR, as JK mentioned, the answer to whether it is a break higher will be given by the central bank today and during the course of this week. As the central bank has had a good grip on the markets, and even with respect to the news, the central bank is also investigating a technical glitch which caused the USD-INR to spike. When it comes to US consumer sentiment in US weakened once again in October as per the Michigan Consumer Survey, and now Fed Fund Futures is pricing a 25 basis cut in May 2024. Currencies have more or less been range bound, except for commodity currencies, which have been on the weaker end. Now, the key data to look out for today would be the India, US, and UK inflation, all of which is expected to come down. That's it from us today. Thanks for listening. Tune in on Wednesday for the latest in the financial markets.